Good afternoon, everybody. Welcome to our webinar. My name is David Sanders. I'm a Managing Director at Results Healthcare. For those of you we haven't worked with yet, Results Healthcare is a leading sector specialist mid-market advisory firm with offices in London, New York, and Singapore. We work with business owners, corporate clients, and investors on M&A and fundraisings. You can probably tell from my blurry outline that I'm working from home in front of a virtual background, but I'm happy to say that our office is once again open, and wherever you're viewing from, thanks for taking part. Today's webinar is on the topic of one of the most active and buoyant areas within healthcare internationally right now, which is commercialization services. And I'll be defining that a bit more precisely in a couple of minutes. But this is really the umbrella term for all the outsourced work that's undertaken by pharma and by biotech groups to ensure the commercial success of the drugs that they're developing and marketing. This moment feels like such an inflection point globally that we could have a productive what next discussion about almost any industry. But as we'll be saying, this area of pharma services has been seeing some quite profound changes in recent years. So given that, and given how much deal activity there's been in this space, it feels like a good time to be reflecting on those changes and asking what we might expect from the next chapter. To help us do that, I'm very happy to welcome three panelists who are senior figures in the industry, but who have represented quite different types of organizations. Firstly, Dr. Jill Harrison is Executive Director at Bioscript Group, a medcomms and regulatory services business which recently secured a private equity investment from Sovereign Capital Partners. Jill has been in the industry for over 20 years, having started out as a medical writer. I'm also joined by Martin Ellis, who came through a number of pharma sales and marketing roles before founding his own agency, Medicom, in 2003. Medicom was part acquired by Havas, and Martin stayed with the business and oversaw several years of strong growth, ultimately becoming chairman of Havas before his retirement from full-time roles a few months ago. And I'm delighted to welcome Neil Jones, Chief Operating Officer of Huntsworth, which is an international healthcare and communications group taken private last year by the private equity firm CD&R. Neil's role at Huntsworth includes responsibility for group M&A, in which capacity he completed the acquisition last year of Nucleus Global. Now, we're an international firm, and as we'll be hearing, the international dimension to this topic is important to understand. So to help with that, I'm also joined by Pierre-Georges Roy from our US team. Just a couple of practical points. In terms of running order, we'll be on until 4 p.m. UK time. Towards the end of that time, it'd be great to put some questions from the audience to our panel. So starting now, please feel free to submit questions through the Q&A icon, which you'll find at the bottom of your screens. And lastly, we'll be recording this webinar so that you can refer back to it later. We do respect your privacy, and so audience names will not be included in the recording. Now, just before we launch into the discussion, I do think it's important to give a bit of background, especially for those who are new to the sector. So I'll present a couple of slides, but I promise to do it briskly so that we can get to our guests. So first of all, what do we mean by commercialization? The term, for the purposes of today's discussion, is intended to cover a spectrum of services which are outsourced by pharma companies and by biotechs, and which all serve the objective of driving the success and the sales of drugs of various kinds. One way of looking at this spectrum of services is to divide it up into the three categories that you see here, being firstly medcomms and med affairs, i.e. communicating with healthcare professionals about drugs, about how they work and about how well they work, whether that's via education, events, professional publications, or other channels. Then you have the more creative services, which would be under the healthcare marketing label. That accounts for about half of the industry by revenues. These would be more about branding, PR, and creating engaging content of various kinds. And then lastly, we're also including market access and health economic services, which help clients determine a strategy to go to market with a given drug in a given geography, with all the insight into pricing and reimbursement and payer dynamics that entails. So a related but a diverse array of services, and maybe no surprise that a wide variety of groups has sprung up over decades to provide these services. But one of today's themes will be around how the competitive landscape has been evolving of late, not least through M&A, which has driven the consolidation of some of the smaller providers into mid-sized groups that you might hear being called contract commercialization organizations, or CCOs. Still much smaller than CROs and smaller than the big global agencies, but a growing force in the sector. And then finally, just to make the point about the last year or so being one of real change, that's certainly been the case in terms of deal volumes. So a record number in 2020, but also a new level of investment from PE investors in platforms, which themselves have been expanding at pace, among them Huntsworth Health, which our panelist Neil Jones is representing today. So that's quite enough preamble, I think. Let's bring the panel in, and perhaps we should start with the inevitable topic of the pandemic itself. Overall, the strong sense that we get is that most businesses have managed to grow strongly despite everything. But if we could perhaps start with Neil, what's your perspective on the areas within commercialization that had particular headwinds or tailwinds?
I think the ones which really stick out in mind are the ones which involved in live events. And that's represented by our group, the Creative Engagement Group. And those are that's probably the one that's really only had the problem. We ended up with quite a large population of our staff on furlough, and in fact some of those people are still on furlough now as the live events areas have just not come back. And we managed to transition a lot of those staff to hybrid, and I think that's been one of the great things that's come out of the pandemic. There's not many great things, but you always get change always produces change and benefits. And if you look at the world of the hybrid event now, so we're very much in virtual events, but we're getting to look up now as a hybrid event. So where you'll end up with the best of both worlds, you might end up with an ASCO where you've got a lot of that content then being disseminated via a webinar. Now, the ability to run both of those, both a live and a streamed event at the same time, is critical. And I think the whole industry, and not just our group, but I think there are many groups out there who've done it well as well, have now developed technology that allows that to happen. And why that's important is that what it's going to do ultimately is going to make the occurrence of a live event, something like an ASCO, incredibly more efficient for the pharmacos. So yes, you will still be getting a lot of spend going to in terms of attending the event and building stands at the events. But actually what it's doing and what it's doing across the whole of the industry is it's cutting the cost base back for pharma and biotech companies. And that's when you're seeing them then produce significantly more spend that's filtering through to other areas. And I think you'll come on to I won't sort of guess your next question, but what's growing and what we've seen growing is a lot of our other businesses. And I think that's as a direct result of a spend shift from a number of areas, whether it's travel, whether it's MSLs out there in the marketplace, live events, and it's being funneled back into what is the real heart of what pharmacos do, which is developing product.
Thanks, Neil. Jill, what's been your experience? Does that pattern sound familiar to you?
Yes, I think so. Certainly for us, the biggest impact on the revenue during the COVID pandemic was the change in the meetings work that we delivered. Some pharma companies were not quite prepared at that time to go virtual. So actually we saw a complete drop off of events. But certainly, there's been a lot of work, I think, to rally and put platforms in place. So actually for 2021, we're back to business as usual in terms of volume of events delivered. But as Neil said, obviously all virtual now. We're not seeing a rapid progression to change yet in terms of getting people face to face again. So clearly ongoing investment in technology and how we can do things differently always. And I think, certainly to Neil's point that the hybrid model, I think, will absolutely come to play. How well we can truly deliver live events and have the parallel live stream, I think, is yet to be seen. It's quite a feat for the number of attendees at an ASCO, for example. So I think a fascinating area to keep an eye out on and watch the changes that come.
And Pierre, what's the view like from over the Atlantic?
Yes, David. So the view is that mostly on the agency side, all the discussions we're having with agencies right now and some work we're doing point that the so-called COVID bump, which saw a growth in revenue for a majority of agencies, looks like it's going to last. So it's more than, pandemic related. I think there's been quite a bit of thinking on the part of bio and pharma in how to sort of outsource more work to agencies And there certainly seems to be allocation, or a vast allocation towards these independent agencies as opposed to the large holdings. And so we're seeing some pretty robust growth, with some agencies having not doubled their revenue, but nearing that trend in the last 2 to 3 years. And so what we also are seeing is that there is quite a bit of inbounds, unsolicited inbounds from private equity, from strategics, Med Affairs from the UK, medcoms from the UK, looking to lean in the US and do that market entry transaction where they fill their white space, not just from a capabilities point of view, but also from a geographic point of view, because we see a lot of interest into first-time transaction where the Med Affairs or medcoms business will have raised a private equity funding or done a recap, and then immediately, as soon as the announcement is made or thereafter, we get some calls with people looking for assets to buy on the agency side.
Well, let's definitely come back to that topic of how these changes are driving M&A. But just to round out the discussion about the COVID impact on the industry and what might be around the corner, Martin, we've talked about innovation, we've talked about hybrid models. What's your take on how many new ways of doing things are going to stick and how many will snap back to something that looked like a pre-lockdown model?
If I could borrow your crystal ball, because mine's a bit cloudy at the moment. It's fascinating being a kind of a more than interested observer over the last year as I moved into retirement and actually seeing what is going on in the industry. And it reminds me of 20, 25, 30 years ago when people were saying the death of the medical rep, and yet we still have them in a different guise today. So I think it's going to be a process of evolution. I think a few things the other speakers have said in the last 5 minutes, I think are very interesting, and trying to work out what is going to happen over the next 1, 3, 5 years, I think is almost impossible. If you look at the COVID bump that Jill mentioned, yeah, all my friends, ex-colleagues in the industry have had an amazing year in the agency world. Fundamentally, I think because the live events, the money for that has been actually channeled into what else can we do? And of course, we've seen a lot of new innovation in online platforms. Will that continue? I absolutely think 100%, in the same way that I don't think we will ever see people returning to the office 5 days a week. So I think there's going to be, the hybrid model that Neil talked about, where, yes, sure, we're still going to have face-to-face meetings. Are we going to have the thousands of people at ASCO? I think highly unlikely, and certainly not for the next 2, 3, 4 years as the world gets to grip with the pandemic. Will we eventually get to the stage where people think we do not need those massive events? We can communicate more effectively online and in a continuous way, 24/7. I don't know. I think the jury's out. People, of course, like to meet face-to-face. We're all humans. We like that human interaction. But I think the last 12 months have shown us that actually, when we're forced to do something differently, we can actually succeed at doing something differently.
Can I just add one point to Martin's last point about whether people meet face-to-face? Anecdotally, what we've heard from some of the pharmacos is obviously they're global. They've got a very dispersed workforce. And actually, they use those large congresses and conferences to work together. Not only are they coming to see what's on, whatever the speakers are saying there, but they're actually doing work with strategic planning and actually getting their teams together. So there's a sort of secondary need to go to those meetings, as well as sort of a human need of face-to-face interaction. So I think Martin's absolutely right. And my original background is from a live events business, and I still suspect that there will be, like, the bigger live events will still be there for those multiple reasons.
And I would just add to that, I think you know, in the same way that for those of us with offices and employees, we're wondering about how to get them back together. I think, you know, there's certainly scope for these larger meetings to be run at regional centres. So maybe we can minimise travel, we can have hubs, we can link them. So I think people do want to get back together, and as Neil said, there's a need for that. Actually, from a commercial perspective, it might just be done differently. Coming together doesn't necessarily mean thousands of people in one place anymore.
So on a related topic, and Jill, staying with you, just as the pandemic has brought huge changes to the way that Medicom's groups engage with their clients, what about internally? Because presumably it's brought the employee proposition into focus in an unexpected way. What do you think Medicom's groups need to do to find and keep good people?
Well, I think the first thing on this is that we're all in the same boat. So, you know, it's not as though one Medicom's company has a different scenario to play out particularly. It doesn't matter where your employees are in the world at the moment. Everybody's experiencing COVID and lockdown. So we've had to work extremely hard to make sure that the virtual platforms work. I think most Medicom's companies were already prepared for that, fortunately, so it wasn't a big shift in ways of working. We have a lot of home workers already. We've had to work exceptionally hard around keeping people together, networking. Recruitment actually has been amazing during COVID. I think perhaps something around sitting at the desk and not being in an office allows people to feel more able to move. So that's a challenge, of course, then in retention terms. So I think the focus has to be on communication, keeping people together, connected in the best way that we can. You know, there's a lot of work goes into well-being now and initiatives that we can all work on together, but separately. And yeah, I think, you know, it's when we actually ask our teams what they want, nobody wants to come back full time yet. Nobody can see that as a possibility even, but some sort of hybrid, a few days a week rota system for maybe 40 to 50% capacity, yes, that might be possible. I think the challenge, you know, Martin was quite right that actually nobody has a crystal ball, and, you know, the Indian variant and the issues there now and the potential for that to be in the UK means that certainly in Medcoms, you know, our teams are very, very aware of the potential consequences. So it's very, you know, we have to be very sensitive actually to the needs of the teams. And I really think virtual working is here to stay in a big way. And the benefits, of course, are that our clients are doing it too. So we get to see them all the time. So, you know, there's actually more access to them face to face in this way than we used to have before. So I think there are some bonuses to it that we should also look to keep.
Jill, have you seen, I've heard some very interesting comments about how recruitment has been much easier during the pandemic, simply because if you're fundamentally employing people to work from home, it does not matter where they live. So the north-south divide, dare I bring it up, and the difference in the cost of living, there's an argument being put forward by some people in London that they should not be paying London salaries to people who are based outside of the southeast. Just really fascinated to hear what you guys think about that.
Shall I go first, Neil?
Yeah, you go first, and then I think about it.
Yeah, before I get shot.
You know, I mean, I'm a northerner, so you know, I completely respect the fact that lifestyle and cost of living in London are much higher, significantly so. And that's not changed at the moment. So I think it would be a little harsh at the moment to be measuring salaries on that basis at this point in time. I think, you know, while property prices remain so different north and south, of course, young people wanting to get into work need to be paid appropriately. It's very difficult. I think, you know, the other question it brings in, if you want to go the north-south, let's think about the US and the discrepancies there too. So there are some huge challenges for employers. Yes, I think the London waiting will stay for now. I think if we come back online, London will get back to work quickly. You know, have my own views on that politically, of course, but that's the way it is. Neil, what?
I just echo that. I mean, each market is a marketplace. So the US is way more expensive than the UK. We're recruiting people in different marketplaces remotely. at the end of the day, you've got to get the talent in. And I think what everyone's experiencing at the moment in every agency is that you can't recruit quick enough. The revenues are going quicker than your cost of recruitment, which is what's driving everyone's performance, profitability up. And we'll come back, I'm sure we'll come back to that when we look at M&A and what's driving M&A at the moment. And at the end of the day, it is a war of talent out there at the moment, absolutely. And you know, we've seen it with some of our particular workforces in medcoms, where we've actually had 2 pay rises already this year in certain areas, in certain geographical areas, and certain specialities to keep that talent. And so whether at the end of the day, if I look at it from a purely financial perspective, you know, the job of a business is to hire the best talent for the minimum cost, right? And therefore, what you might see is more demand for people who are prepared to be paid a little bit less if they're living in different geographical sectors. And the work that you're doing allows you to be remote. So if you look at the split of what's remote and what's not, medcoms, for example, medical writing is absolutely perfect for remote. It can be done anywhere. The creative side, so if you look at the creative side, that's really difficult to be creative when everyone's dispersed, and you do need people to be together, and therefore those hubs will drive people into certain areas. So I think that whole of that mix says at the end of the day, if whatever you need to pay to get your talent is what you'll pay.
So I might add a US perspective on this. And speaking from personal experience as an employer, you price the job, not where the employee lives. And with all the movements right now for pay equity between men and women, I would say that to my UK colleagues, be careful if you're trying to get a labor arbitrage by making some investments in the US and saying, oh, they're in St. Louis or they're in Indianapolis, so therefore I can afford to price them a little bit lower, because we've seen the rumbles of litigation around pay equity and fair wages across an organization. So just FYI.
And that overall theme, Pierre, of the war for talent, that's certainly been a theme that has been played more and more often, you know, even pre-pandemic, around the industry in the UK and Europe. Has there been a similar direction in the US or North America?
Sorry, repeat the question. You got cut off.
The war for talent and the I guess growing scarcity of really skilled staff, experienced staff around commercialization. Is that as much of a theme?
This is what we're seeing. I mean, young university graduates, so people who are recently minted with their university degrees, they're still looking for work, quite frankly. And so they were the most impacted by COVID, right? The bracket that hurt the most in the United States last year, when, you know, the world was coming to an end and there was a market correction and everybody was running for the hills. Those that lost their jobs or couldn't find work were mostly 18 to 30-year-old folks. And very few people in their, well, there were some people who got let go in their mid-stage careers, but that was more the exception than the norm. And so it's a tale of two stories, right? So the younger folks are easier to recruit because they're still looking for that first job. And so, for example, I think in the New York area, there are maybe 10 universities in the tri-state area that are printing bioengineering degrees or scientific degrees, computer science degrees. So it's easy to recruit around here, younger folks. Where there's a real war for talent is that 5 to 15 year out post-university graduation. That becomes a little bit more tricky, and that's where there's more tension between employers to try to recruit people and poaching.
Thanks, Pierre. Moving on to deal making, which you touched on earlier, Pierre. Martin, you've seen this from both angles, I suppose, because you built up a business, sold it to a big network, and then stayed on and saw the thought process from that global agency viewpoint. Will we see the groups that were doing all the deals 5 years ago come back into the market?
I don't think they've ever left the market. I think we've seen a slight change in the profile of the acquirers. I think we've seen a lot of different factions coming to force. But fundamentally, I think, I don't know, you have the data, but my impression is, if you look at who is actually acquiring agencies, it probably is still the same half dozen networks that are making up the majority of the acquirers. I think, again, looking to the future, I think it's going to be very interesting, because in this 1 year period of the pandemic, we've seen agencies explode in terms of their revenue and presumably and hopefully their profit margins. Therefore, you're probably going to see higher expectations and higher valuations over the next few years. The networks will always be there. The networks will never cease to exist. Some will grow, some will get a little bit smaller, but fundamentally, agencies, I think, really benefit from being part of bigger networks. I think we can look in the past and we can look at various, if you like, fund managers that have invested in a variety of independent agencies around the world and tried to create a network. It doesn't really work. Not as well as the major networks acquiring the right agencies for the right reasons.
Can you elaborate on that just a little? So what would you see as the right reasons? What's the recipe for success, and I guess the converse of that?
Recipe for success. Okay, I'm quite biased. Having sold to Havas, having then spent the last 3 or 4 years working with Havas in a M&A role, I think that what is critical, anybody who is buying, and more importantly, any agency who is selling, there has to be a point of differentiation. So if you are an agency, let's say you're a creative agency and you are selling into a network that has a myriad of other creative agencies, good luck growing your business, because you are then going to be in an internal competition for the new business leads that come in. So I'm a great believer in having something that is different, something that is unique, that you offer to a network when you sell, and then you're going to reap the rewards, because any opportunity into that segment will automatically come to that acquired agency.
Thanks, Martin. And I guess, Jill, your business, Bioscript, is one of the latest to go through a transaction, but not with one of the larger agencies, with private equity. In your case, from Sovereign Capital. What were your preconceptions about private equity when you were going into your first meetings with potential partners, and how did those evolve?
Well, I think, I hate to say it, but like many people, we'd had some quite bleak views of private equity and what that might bring. And, in honesty, while I was CEO for several years, I was really building towards the sale to a larger organisation, thinking that that's the route we might take. We had discussions with both private equity and other companies who were interested in Bioscript. And we went down that route in the end, because I think, Martin is right that, if you're acquired into the right group and you're adding a point of differentiation, then yes, of course, new business can come in and you can continue the journey largely absorbed as part of that group and what they're delivering. We've chosen private equity because I think, the meetings with the teams showed me that, you actually are adding a huge talent base just from some of the investors, certainly at Sovereign Capital, very intelligent, educated people who can work very closely with us to drive further acquisitions and growth of the business. So, we felt that this was the best route for Bioscript, largely because we have got reasonably specialist services in what we do. So actually looking to add other small companies that we can support in their journey along the way, it was very attractive to us. And I think some of that's about the passion that you have as a business owner around your own background and the science and what you're trying to achieve as well. So it's perhaps partly that, Drew and I were not quite ready to give up what we were doing at this point in time. Often if you're acquired, then, there's a sort of earn-out period and you can walk away. So we wanted to carry on.
And Neil, we've heard from Martin that agencies aren't going to go away. And Jill's spoken about the private equity experience, and we're certainly seeing PE, driving activity levels in this sector. For you as a consolidator, for you as a business that wants to grow and sees M&A as a route for growth, how do you compete, and how do you differentiate as a prospective acquirer?
Well, I think it's actually back to what both Martin and Jill have said. When Martin said point of differentiation, so we see clearly there's been a huge volume of activity in the marketplace this year. We've seen a huge number of opportunities, but actually, and we've turned down some good opportunities, because actually what we'd be doing is we'd just be adding bulk on to what we've got. And actually, if you want to be successful in M&A, you've got to add something different to what you're offering already. So what you don't want to add on as bulk to you could actually help somebody else because they don't have that service. So I think when you're bringing businesses on, for them to continue to be successful in an agency or a group, you've got to allow them their own freedom to operate. So the operators are not as still entrepreneurial if they can, but again, feeling like this is their marketplace within this universe. So as Martin says, they get any particular leads in that sector goes to them and they can grow. And it's about keeping people happy, quite frankly. So yes, it's competitive, but it's about, a lot of it is about human interaction, which is actually quite complicated when you can only do it off Zoom. So it's about what you offer. It's about where they sit in the group. It's about how they feel about fitting into that rest of the group and whether they get on with people. And then do they trust you and what your reputation is like? I think your reputation is hugely important in terms of success and potential to bring other assets in.
And I guess there's been so much going on that it's fair to ask the question: can there still be the same volume of attractive deals in coming years? So, to you, Neil, first, are the low branches bare yet, do you think?
I suspect not. I mean, this industry is vast, right? And I come across businesses I've never heard of before. And to be honest, because I'm not actually from the pharma industry, I come across services I've never seen before and go, wow, that's great. And someone's developed it, and they're developing it all the time. We've seen businesses that have come out, a couple floating around. I won't mention them, but basically those businesses weren't really there 2 years ago or 3 years ago. So the industry is developing. These are really big businesses, especially on the digital side, and the ability to connect digitally to patients and HCPs and KOLs is really important. So I think we're going to see at least the next 24 months of huge deal volume. I think you've got, as Jill said, you've got the COVID bounce, and because you can't hire people quickly enough, and your cost base has gone down, so you've got a big profitability bounce as well. In the US, you've got the Biden factor. There is a huge fear of increasing capital gains tax. Let's talk about capital gains tax in the US, which is about 25%, I believe. Correct me if I'm wrong, going to the same level, becoming income tax, which could be 50%. And so that is going to drive a lot of entrepreneurs to look really clear at selling their business right now. And if they're on the back of a COVID boom and a profit boom, it's the perfect time. So I think that will certainly feed in for the next 12, maybe 24 months.
I think it's very interesting, Neil, what you just say about kind of the developing businesses and how COVID has created primarily new digital businesses. And I think that they've always been there, but I think the industry, the pharma industry, has been very slow to adopt true digital technology, digital communication channels. Almost having been forced, well, not almost, they have been forced to actually utilize those digital channels in the last 12 months. And surprise, surprise, the industry's gone, hey, wow, this is good, this works. So I think we're going to see some explosion of digital communication businesses that have been around for a good number of years, but never really got traction. All of a sudden, they're doubling, quadrupling in size, and they're going to be a force to reckon with. What's going to happen? The networks and private investors are going to go, hey, that's where we need to now put our money. So I think if I had an online digital business, I'd be sitting on that and growing it for another year or two and then sell.
Yeah, I might add a couple of observations. So we've done a study of the overall marketing, healthcare marketing sector. It's very fragmented, as we all know. So the top 5 players by revenue only have about 7 or 8% of the market. And so there's quite a bit of growth or room for consolidation. And so a lot of, especially private equity, good, highly reputable firms, which I won't name because some of them we're working with, but highly reputable firms are coming up with thematic investments strategies where they are essentially grooming people who are off non-competes or are sort of like Martin, for example, who's retired, but maybe as some ideas. So that we see a lot of entrepreneurs and executives who are being essentially given some capital by private equity to start businesses and get them try to put them at scale very quickly, with a view to essentially participate in this. I wouldn't say this frenzy, but this very frothy marketplace right now. And the backdrop of all this is that what we're hearing from pharma and biotech companies is that they're hungry for alternative vendors or providers, and they want to give a shot at qualifying emerging agencies as vendors, and then give them an AOR designation on a specific product or brand, and just try to help them grow their business that way. So we've seen that over and over in the last 12 months, where people have announced, "Hey, I'm starting this agency, and here's my first client." And then you realize it's a Pfizer, or it's a Sanofi, or it's a BMS that's given them a shot. So it's interesting. And, to Neil's point, I think we're going to see a lot of these companies, agencies, growing fairly rapidly from $3 to $5 million AGI to all of a sudden they're a 15 million AGI business, and they have good margins and they become attractive M&A candidates.
And talking about the consolidation next wave, we speak to a lot of UK and European based acquirers who are keen to turn to North America for their next wave of acquisition candidates. Do you see it the other way around? Do you speak to US based consolidators who are asking you, what the interesting businesses are to buy in UK and Europe?
I see some interest. I think there's so much trepidation around the US market right now and activity that, I would say that's a minority of companies that are looking in Europe right now. It's not the vast majority of people. People are looking to make acquisitions domestically, mostly.
And then, I guess the size of the market is such that you can forgive that being the first thought for US-based groups. Just turning to valuations, Neil, do you think, given where pricing has got to for bolt-ons and for platforms and the direction over the last 2-3 years, do you think pricing has got out of kilter with the fundamentals?
No, not necessarily. I think it's down to discipline. I think there's a few things to play. I mean, money's cheap. So pricing is about your expectations of future growth versus your cost of capital. Okay, those are the two dynamics in there. So if you think a business is going to double overnight, then you can afford to pay 20 times for it. It doesn't really matter. So that's about judgment, and that's about having enough information around you and due diligence, and enough people around you, like Sir Jill and Martin with experience, that go, look, I can see where it's going to grow long term, and we've got a blip here, so this is where I bet the long term with growth, and then just play that back in, and then everyone's got their own models. Because when you're bringing businesses into another business, there are elements of synergies. I mean, in people businesses, there's less synergies than you think, because mostly you just need a little bit of back office maybe, but increasingly there's property synergies which will come into play from a virtual environment, and maybe that's adding another point or two onto the multiples. And you do see some pretty chunky multiples out there at the moment, but I would say the buyers, and in mostly a PE, my experience, and but before we were taken private, I met about 30 or 40 PE houses. They're all very, very smart guys, right? And they've all basically got the same model. They may disagree with that, but they're basically the same model. So they're smart guys. And so I think it will be fundamentally that continues to drive it. So I wouldn't say they're out of kilter. I think they're high, but I think they're high for a reason.
Yeah, the fundamentals, as we were talking about at the start of the discussion, the fundamentals are very strong. Martin, you've been in the industry for the duration of your career. Do you think that the fundamentals, getting the crystal ball out again, have any reason to change over the medium term looking forward?
I really don't think so. I think if you ask any entrepreneur who founds a business, doesn't matter what segment, what sector they're in, why do you start a business? Well, you start it because ultimately you know you're going to sell it. It's just a case of how long does it take to get to the point where the interest in the business is attractive enough for you to then say, yes, I want to sell it. So that fundamental is going to remain the same. I think that we might see faster acquisition of new startups. Again, as we've discussed for the last 45 minutes, the whole pandemic has changed our way of thinking, has proven that there is an alternative way of communicating. We're doing it now. It does work. Okay, you miss the human interaction, but you can achieve 90% of what you would have achieved if we'd all been in the room together. Arguably, we might even actually achieve more by not being in a room together because there's less distractions. We're more focused on the purpose of what we're here to do in this 60 minutes. So I think we might see new startups actually being offered increasingly attractive amounts of money very quickly. And by that, it might be 2, 3, 4 years since inception. Whereas I think if we look back historically, I don't know what the average was, but I would say it was probably at least 10 years before an agency got to a sufficient size where the EBIT was attractive to an acquirer. So I think the only thing I can see definitely changing is much faster startup to acquisition periods.
Jill, you're nodding. Does that?
Yeah, I am. I just think that that's absolutely correct. And in fact, we are seeing it. So I think, our own history, we went through that classic 10-year roughly route. But now, we're seeing some fantastic businesses. And again, it goes back to the fact that there are many, many niches now in pharma and the services that agencies can offer. So there are some very small but very smart companies out there who are doing exceptionally well. They're off that MSA grid, so they're getting these one-off agreements with the big clients. So there's a huge amount of potential, maybe after you've proven yourself over about 3 years.
Thank you.
I might add, I've seen probably from private equity a bunch of slides that when they're presenting to our clients ostensibly to convince them to go with them. And so you have, agency of record model, and then you have med affairs, medcoms, combining those two sort of capabilities. And then quickly thereafter, you're going to go and look for a data shop, an analytics shop, or a peer-to-peer consulting shop, sort of to round out the offering. And then you have a full commercialization play. And so a lot of people are solving for that right now. And that's a lot of people are chasing the same strategy.
Neil, what would be your predictions as we look forward in the medium term?
In terms of many predictions, like who's going to win the title and things like that. So no, well, in terms of M&A or volume or pricing.
More just picking up on the themes that Martin and Jill spoke through. So any changes in the fundamentals, I suppose?
No, I do think they're right. I do think smaller businesses will increasingly come earlier in the cycles. I think there's so much thought process about what new services are going to be coming through and going to be required for you to develop your offering. And again, that goes back to the ownership. I think the ownership, the smaller groups, the PE businesses in the market are using a lot of consultancies and there's a lot of thought about where the business is going, and that will naturally lead to being able to pick up the types of businesses that Pierre was outlining, and I think they'll come earlier. And I also think the risk The risk of buying a smaller business is less. You can take a risk on a smaller business. If it doesn't quite make it, it's not all the be all and end all. So I agree with that. But equally, being able to take a large business and bring it in for a financial return is equally as attractive. So I think that will continue. I do think people will look at those smaller businesses and bring them in quicker, especially on the digital side.
Thank you very much. I wondered if we could start bringing some questions from the audience. So first of all, perhaps one for you, Martin. What is the number one thing I should do to make my business attractive on exit? So you spoke earlier about differentiation. I guess it's developing that line of questioning.
So attractive on exit, do they mean
sale to a consolidator, I presume? Right.
Not on that individual's particular exit from the business. It's just the basic fundamentals, isn't it? I mean, we are a people-driven business, so it's the personalities. I think it's making sure that the acquirer has the confidence that the business has a solid base beyond just the founder. I looked at many businesses where you had a very strong founder and a very weak board of directors, or indeed no board of directors. So I think it's really important that at exit, an individual can demonstrate that they have the plan in place for the business to continue, even once they have completed their run out and left. That for me is absolutely key.
Thank you. And Jill, you've been through a transaction, if not an exit, and you'll be, I guess, over coming years, turning your attention to expanding your group partly through M&A. What would be your take as a prospective consolidator on that same question?
So, we sort of hit the 10 million turnover mark before we felt we were big enough to be considered. And again, to Martin's point, that was partly also our infrastructure and getting us into the shape that we wanted to be. Some of the businesses that we're looking to potentially work with are much smaller. In some cases, not always necessarily well structured in terms of the management team, but the confidence from us is that we can manage that ourselves and bring that in. Partly, I think, where we have the understanding of the service offering. So again, I think this comes back to the question actually of maybe it's less about size now and more about the offering and finding something that's highly in demand, that the agencies are going to want to look for to add to their platform. And I think with there's so many developments in pharma now, and certainly with additions of AI and the FDA have approved that for drug discovery, I think we can expect to see an increased amount of data that needs to be handled. So, I think it's a wealth of opportunity at the moment. I don't believe there is a perfect size. I think it's about what you do and how you respond to the very shifting marketplace that we're seeing in pharma at the moment.
So that very question just been asked on the Q&A as well. What do you think is the optimum size for our kind of businesses? Maybe one way to tackle that is to ask what we think the optimum size is from a client perspective. So if you are a product manager at a biotech or pharma company, do you think they notice particularly in terms of the service delivery? Do you think they care? What is there a correlation between client experience and the size of the business? Perhaps if I put that to Neil first.
I think fundamentally it's just how you service your clients. Are your clients happy? Are you giving them the right level of service? I don't work and service clients in the sector, but I buy services. I don't really mind where I buy the services from. I buy them from very small businesses. I buy them from very large consultancies. What I want is a really good level of service from someone that I can speak to that I like. And the size of the business is kind of irrelevant as a buyer of services. I'm sure Jill and Martin would agree that it's about delivering the quality of service to your client that you've promised at the beginning and potentially over delivering and making them think that they're very special. So I don't think there is a perfect size.
I think, as a smaller group, we certainly struggled occasionally with clients who would work with us very consistently. And then when the product was heading to launch, we might struggle to retain or win wider services. And that was really due to the geographic reach of our team. and the fact we didn't have a US office at the time. So I still think that clients, during those extremely busy periods, when they know that they've got a lot of work to do, they still do see size and scale as important. But actually what we experienced is that around that, there's plenty of work to pick up pre-launch and early phase. And I think therefore, to Neil's point, absolutely it becomes about the relationships and the strength of those and the way in which you do the business. And I think quality always, of course, is important. So getting things right first time that will never ever change at medcomms. We're judged on the last piece of work that we do, no matter what size and scale we are.
Martin, do you agree? Is there no Goldilocks zone for commercialization businesses?
I would totally agree with what Neil and Jill have said. We all know in the agency world, the answer to the question is yes. Now, what is the question? So agencies are very good at promising to deliver. And most agencies, in fairness, do deliver. Size, I think, does matter. To Jill's point, when you are at a particularly busy period of time for a client's brand, sod's law, that's when the phone rings and a new business opportunity comes in. And in the agency world, you don't turn down new business opportunities. That's the beginning of the end of your business when you stop looking at new opportunities. So it is difficult. For me, I can only reflect back, and I think when I was most happiest was when my agency was about 60, 70, 80 people. It was a great size because it was big enough to be flexible, small enough to be very, very personal. But from a potential sale point of view, well, as a business owner, the bigger the EBIT, the better the time to sell.
Thank you.
I might just add a couple of observations. What we're seeing with US agencies is that there's probably a dozen right now that are independent, are between, you say, 70 and 200 full-time employees. And so when we're having conversations with those agencies, they often tell us this: I have a prominent position with a big pharma. I could get so much more work out of these people if I had an office in the UK and an office in Singapore. And that's also a driver for M&A conversations or tie-ups. They're saying essentially, I think I could go get another gazillion dollars of project revenue if I were able to show that I have people on the street in London and in Singapore. So that's, I don't know if that answers the question, what is the optimal size to sell a business, but certainly a lot of agency owners in the US, independent agency owners, are solving for that problem right now, or trying to solve for it.
Yeah, we all know the issue.
Sorry, Martin.
Sorry. I was going to say, we all know the issue though, and I'm sure we've all heard it so many times before, which is when the US says, yeah, if I had offices elsewhere in Europe, then business would follow. It's not normally true because the business in, let's say, France is normally dictated by the local French client. It is not dictated by the US. So I think that's a very, very easy trap to fall into. And one, if I had an agency in the US, would I be looking to put big investments into opening offices on the strength of a client's promise? No, I wouldn't.
I just like to add that sort of to both of those points. I think Martin's right. I think that's where the budget holders are that you get, and he's absolutely right. The US budget is not necessarily international. And to Pierre's point, what we've been able to do when we've added smaller businesses on, they've actually grown rapidly because we've been able to introduce them to a new set of client contacts that they wouldn't have been necessarily able to access before. It would have taken them a longer time. And especially where you've got a differentiated service. So the client's buying this service, but you buy something else, another company that offers this service that sits close by a site, then that's the perfect time. And that business that you brought in actually grows. And that's when, back to M&A, all fits together. That's the perfect acquisition, whether it's that big or just that big. It's the ability to grow it with those additional contacts.
Thanks, Neil. Last question. So Pierre mentioned Singapore there. Often growth outside of Europe, UK, North America can sometimes feel like an afterthought. It's not been central to many growth stories that we've seen. Any sign of that changing anytime soon? Jill, Martin?
Well, yeah, I think it's a difficult one, because I do feel, you know, we are seeing some quite good tech companies now emerging from different countries, and again, in the sort of world of digital and AI that we're moving into, I think we need to be cautious to say no. And again, it's, as I said, I think, you know, we need to keep abreast of changes and what's happening and who's providing services actually to pharma, where they're coming from. You know, some of those markets are becoming more mature now, and actually, you know, years ago it was all very fresh, startup, not so much talent, lots of training needed. We're going through a level of consolidation of that in certain territories now. So I think it's probably wrong not to look at that global picture. And I think certainly Asia is somewhere to keep an eye on, and at least consider as part of the growth strategy. You know, so I mean, for Bioscript, probably a little bit too soon, but longer term for sure. Because at the end of the day, our clients are working globally, and yes, absolutely, we need to go where the global budgets are, not the affiliate local markets. So that's one of the key things. I think just we should all be very respectful of the changes and the skill sets that are starting to emerge.
I think, David, we all went very silent when you asked that question. It is a very difficult one. I think that we all know culturally, the Asia Pacific region, probably with the exception of Australia and New Zealand, is so different to Europe. And by the way, the UK is still in Europe, so you don't need to say Europe, UK, and the US. I do a political point there. It is so culturally different. In my time at WPP initially, and then latterly with Havas, I'll be honest, I never really saw true success in the Asia Pacific market as part of an international network. Very difficult market to work in.
Thank you.
I just echo that. I haven't seen that change yet. It may change, but if you're going to make money in this industry, it's in Europe and the US. That's where you.
I'm afraid we're out of time. So thank you very much for those perspectives. Many thanks indeed to all of our panelists who've been very generous with their time and with their points of view. Thank you to audience members for being involved. I hope you found it useful, and do look out for a follow-up email which will have a recording of the webinar. There's so much going on in commercialization. We could have devoted a whole webinar mini-series to it, but we think it's an incredibly exciting sector. So of course, if you're involved in the sector and you haven't spoken before to Pierre or I, please get in touch. It'd be a pleasure to speak and maybe even meet up. Until then, do keep well. Thank you.